The local economy is expected to continue showing signs of strain in the second quarter. SABC will tomorrow release the GDP data for the period. Economists expect economic performance to remain weak at 0.3%. Many say the economy is showing resilience despite intense rolling blackouts, high interest rates and falling commodity prices. The local economy grew by 0.4% in the first quarter. Now growth was recorded in manufacturing, transport, finance and mining, but agriculture recorded a major contraction in the 3 months. The second quarter is expected to show weaknesses in the economy due to a number of challenges. These include logistics and electricity supply constraints. Business sentiment also remains weak, dragged down by persistent power outages, high interest rates and cost pressures weighing on profitability. Let's stay with this particular theme and also look ahead at the price of petrol that is set to increase this week, as you heard. I'm now joined by SABC News Economics Editor, Tshepo Mongoai. Tshepo, thank you so much for your time. It's not good news for the economy. It doesn't seem like it.
It's a seesaw, and it's a reminder that we're not quite out of the woods. Of course, we've seen with the Russia-Ukraine war, that was a major driver of inflation at a very fast pace. But we're out of that for now, but that doesn't mean that the drivers of inflation are out of the window. They will remain with us. The geopolitical issues that we're confronting, the domestic issues, will continue to drive the inflation going forward. And we've seen now with this price of increase, the petrol price increase, which is a bit high. In fact, looking at the inflation picture, the expectation is that while we've seen some moderation of 4.7% in July, August, we could see a 4.9% somewhere there in terms of inflation. So those risks remain with us. The exchange rate is one. And the bank made it very clear that they are determined to act on new data. Of course, based on the current data that we have now, we may say that we're not likely to see another hike. There are those who are already talking about a cut, perhaps in the third quarter of next year. But
third quarter only?
That's only next year. But that's what, given what we know now, we might, something completely new might emerge in the next few weeks that might change the picture completely. So it's not a straightforward line when it comes to the issues of dealing with inflation. The bank is convinced that what they are doing is working, despite the pain that many consumers are going through. They say they've contained inflation. Many central banks across the world, they actually look at the Reserve Bank in South Africa with admiration that they've actually done extremely well in containing inflation, and that has actually protected the value of the money in your pocket. But the other issue is the central bank has alluded to is the price setters, because they need to move to a point where the so-called price makers, price setters, are convinced, are expecting inflation to come down. Confidence, it's still not quite strong in the economy. There are concerns that prices could go up, and if prices could go up, those who are employers and so forth might make decisions that could actually trigger inflation going higher.
And all of this is happening, Tshepo, against the backdrop of consumers who are already buckling under pressure. I mean, just a short while, just a few weeks ago, you and I were talking about defaulters. As the banks are saying that people are starting to really default in numbers, and one wonders now, with an economy that, may not grow as expected, by some, and at the same time now the price of petrol going up, that's certainly likely to put even more pressure on consumers.
No, that's true. But everything is done in balance because what the central bank is looking at is if this is becoming a systematic risk to the system. And I'm sure they are in conversation with banks in terms of the provisions. Remember, banks make provisions for this kind of risks. And they can absorb that risk to a certain point before it can actually be a risk. And what the bank is concerned about is to ensure that this is not a risk So currently, as we speak, although there are defaulters, but that will not translate into a significant risk to the economy. Of course, it's a pain when you lose your car. It's a pain when you are kicked out of your house because you cannot pay. But that can still be managed by the local banks and the economy as.
And I wonder then, though, how can the economy continue to weather the storm that is rolling blackouts? Because, again, today, we're seeing stage 5 and a lot of South Africans wondering if we're going to go back to stage 6.
Yeah, load shedding, it's a major concern for the economy. You might have seen that the National Treasury released a communication to various departments regarding the risk in terms of fiscal containment. Some of the announcement that they've made is that they would likely make a freeze on hiring. Travel costs, conferences, and of course we've had this many times in the previous budgets, but it looks like there is not much movement in terms of containing costs. But the National Treasury is quite aware of this, and I think they're going to act and probably their action is going to be felt in various government departments going into next year in terms of how they're going to force government department to cut costs. And those who are on the receiving end of those services, which is you and I, will probably feel it and see it when it happens, because it will be the arm of the National Treasury forcing them to take decisions that for the longest time they were quite reluctant to take, and that is likely to affect some services, because if it was up to them and there was proper planning, perhaps maybe some decisions could be taken to avoid services not affected.